I'm Tira Gray, Managing Director of CoinDesk Events, and it's truly a pleasure to welcome you and our very first session, which could not be more appropriate to start the day with, from Wall Street to crypto. We have three esteemed Wall Street veterans joining us today for this opening session. It is my pleasure to welcome them to the stage.
On Libra, and we're trying to really change payments and make them more open and fluid for the world today. So that's in a nutshell.
Great nutshell. So when we spoke, I was just
Good morning, gentlemen.
I was
you can hear
impressed.
me
I know you're
okay?
very humble.
We're off and running with our jet lag, and we're going to try to take this down as articulately as we can under the sleep-deprived circumstances. So you all had a tremendous career on traditional Wall Street before pivoting into crypto, and I thought it would be really fun for the audience to kind of hear what was your aha moment. So Mike, let's start with you. Lifelong career on global market infrastructure. It makes sense that the market structure potential of crypto would be an obvious opportunity. What was your moment? Where did you see this future?
Yeah, it came over time. I think it's fair to say I saw fragmentation for my entire life. And when you start scaling a proposition in financial markets, you naturally hit boundaries on how you can bring a product, an idea to the next region, to the next market, and how to embrace the next group of clients. And my pivotal moment was when I really understood the impact of technology on where the planet is going in terms of computational power, connectivity, and realizing how much, and I may say that as a liquidity provider, how important liquidity is in driving sentiment into the right direction and driving adoption. So it came over a few years that I realized, okay, there's a big opportunity, equally challenge, to get this right and to really gain a global perspective on how financial markets could look like in the future.
Terrific. Fabio, I'm going to go to you next. You ran founded Abraxas 16 years in. You had a moment thinking, wait, we need to pivot to digital assets. How did this happen?
Thank you for the question, because you know already the answer. For me, instead of overtime, it was just one day. One day I was on a plane from Milan to London, and I had an EasyJet magazine in front of me. And apologies for what I'm saying, but there was a beautiful picture of a very nice girl, actually, and I was looking at the picture, and then I saw Ethereum Foundation. So I started to read the article, and on that basis, actually, I got involved in finance, in crypto. That was my moment. Then, as soon as I landed, that afternoon, I met a guy that was doing arbitrage on sterling euro between two exchanges. And I was flabbergasted by the spread. I used to be working with less than a basis point spread on the swap market, and the guy was talking about percentage points. And that was back in 2017, early 2017. And then, in the evening I was out for dinner with somebody else that was involved again in crypto. And in the night I couldn't sleep. So the morning after I started to study the crypto market. So that was my moment.
Serendipity played a role, it sounds like.
Yes, correct.
Gautam, you covered fintech investing your whole career, so I would certainly think that experience lent itself to this, but could you define what was the moment that it all clicked for you?
Yeah, sure. So I come from Web2 tech investing background prior to getting into crypto. For me, it happened in two stages. Stage one was one of my very close friends wanted to start a company where you start to match resume to people's profile on LinkedIn, but couldn't do it and failed because couldn't access the database of LinkedIn. It was restricted. So when he got into Ethereum, he introduced that concept to me, and I found it very powerful that you can have like open databases to access, and then people can build on each other's work. So that was fascinating. And I think stage two was generally, if you look at most of the Web2 companies, a lot of value accrues based on network effects, so whether it's Facebook, Google, and others. And when I learned about the process of how you transfer ownership to users, and then on the back of it, you build a network. So the power of network effects, I could see it play out in this new tech stack. So that was another kind of aha moment for me. When I combined those two, it was very clear to me that we need to take technology from just putting lipstick fintech versus really reinventing the tech stack for financial services.
And making it, I think, that ultimately, we're not there yet, more accessible for all users.
Exactly.
And not this esoteric asset class. So let's go backwards now. I'll start with you again, Gautam. I would love to know let's start with the positive. What are the frictions in today's market that we are unanimously agreeing that crypto does solve for? And then we're going to obviously go to the other side of that. Where is it not succeeded yet? But let's start with the positive.
So I run Brevenhammer Digital, which is a crypto asset management platform. This is a 24/7 asset class. You need to be able to move assets from dollars into crypto and out of that, literally weekends, weekdays, all the time. I think that is a new concept, if you will, for traditional finance. In fact, sometimes we run across this problem where we still have to interact with traditional finance institutions, and sometimes we have trouble on weekends to move from traditional rails to crypto rails, right? So I think that's kind of a big shift that's happened with crypto, where it's 24/7 and accessible to anyone at any point in time.
Bitcoin right now. We think it's the most decentralized,
the big shift is really like this idea that it never stops. So it's trading all the time, and it's fascinating.
We also think that there is an opportunity for people to do way more than they have done on it, and that's one of the things that we're trying to build. So we are
when you have a mismatch, especially if you're involved, like we are involved as well at Abrax,
is one of the most fascinating areas of crypto,
moving assets from traditional, so the banking system into the crypto.
My partner and I got
to
Hong Kong, and the first thing we do is we're like, you need cash to take a taxi. Go to the airport. They basically hit us for a 10% fee to exchange money there. We go down the street, and we then get 10% more dollars, right? So simply for the convenience of needing cash at a moment,
and Mike,
we had to pay a pretty big fee for that.
Moving liquidity is music to my market-making ears.
How long do you think it takes before
making
these types of payment rails that sort of are able to extract that friction out of the market are usable for all of us, so that I don't have to think about when I go to Hong Kong or I go to Thailand or I go to India that I have to now do all of this conversion in my head and really just be paying these taxes all along the way, because I just don't know how to transfer money easily and simply in every location.
As a market maker and liquidity provider is getting this right technologically.
My favorite taxis in the world. I just love them.
Hopefully creates not just resilience but also trust and confidence.
But I think one of the things that
this is then in my mind
really
the key to the door, which you need to make wide open to really bring regulators in, big institutional players that trust the system and also understand the benefits of what we claim will be the future coexistence between TradFi and digital assets and DeFi. And we are not there yet, and we are also not there yet, as we are basically embracing a bunch of use cases where question mark could be put on how does that work out from a synergy perspective, and how do we want to bring that to the next level. I feel this is also about transparency and alignment. And then next to that, I talked about the technological side. If you just embrace the idea that computational power will increase significantly over the next 5 to 10 years, then you're a bit back in a big data game, because with digitization, the planet will earn and get more data, and that feeds then back into risk allocation models. And if you believe in it, I think the
universal money address
into driving better decisions,
I got most excited when I read the information you sent.
TradFi side is, if that is true, then
the idea that
all
of us have a unique identifiers that
volume
can
increases.
be direct
so
bank accounts.
I'm dreaming a bit about getting this technological layer right, creating interoperability and connectivity, and then go from there.
With folks from Africa.
It's amazing to hear big data starting to come back again. I thought that was dead about 7 years ago, and here we are back to big data. We've recreated it in a different shape. We've also recreated how risk and return works in this space, and I think this is a really important thing for retail investors to understand, and anyone who's looking at this space. We can't use traditional risk-return models, I don't think, and I'm going to let you guys tell us if that's the case. But I would like to know specifically what should we be maintaining from traditional finance and how we look at risk and return, and then where should we be shifting to a new lens?
I think we're building
part of the market.
both,
So
but
let's go
initially
backwards.
we
Michael,
saw
huge
so I'm a
uptick
big
for UMA in places like
supporter
Latin America,
of
because
getting risk
you genuinely
right.
send
when
money
I
on the
just see how
Bitcoin
we build
rails,
our
but you can
crypto
send
and
it in
digital
your
assets
local
business at
currency,
float
and it's
rates,
fast.
we very much
right now
focused
you
on
can send
building
money
an
between the
end-to-end
US and
control layer.
Mexico
And what we
using
realized
Uber,
is
and
this
it's
is not
cheaper than
by
anything else that
taking
exists. It's fast,
what
it
you
uses
build
real-time
from an
payments,
infrastructure
and
perspective
that
on the
sort of
TradFi side
reduces
and
some of
just
the
tweaking it
issues
a
with
bit.
inflation.
So you just need to go back to a
currency exchange.
24/7 mindset. How do you operate markets
For people who live in
around
the
the world
US
non-stop,
and
and
other
how do you
countries,
treat
have good
risk
banking
internally?
systems in
And this is not
place,
just
but
about
that's
risk
not the
allocation,
case
it's
for the
really
rest of the
about
world.
market
And
risk and
we know
counterparty risk
that
and credit
people
risk.
in
So
different
if you put
countries
that
have
all
been looking
together,
for
you
solutions
just
like this,
need
but they
a
haven't really been
very
able to find them yet. So we're
functioning
really
machine in order
excited
to
about
get
them
that
because we actually
right.
think
But
it
once
will
it's there,
change
right, you
people's
embrace really the
lives in
benefits
a way,
of
which
digital
sounds
assets
sort of a
adoption.
little bit
And that's a bit the
highfalutin.
way
But genuinely, if you can send money faster than you used to be able to do, it will lift GDP.
I agree,
eventually.
and also I would
we've
add,
got
like,
great partners
for us, when we do arbitrage, the
exciting to see.
counterparty risk is the most important one.
You mentioned
have to
earlier
think
you worked at
whatever
PayPal.
is very traditional finance, you can
PayPal,
apply
for me,
obviously
did a very similar thing
space.
20 plus years ago.
You know, because the
Do you have that same sort of feeling in your gut as a brand marketer that says this could be the cusp of a real behavioral change?
Actually, I mean, the people
really
here are probably all
free
regulated,
money out
actually,
from a lot of
the
these
one on the other side
locked
are
up
not.
systems and players.
So, you know, counterparty risk, credit
And
risk
look,
is
I was
very,
at
very
PayPal when
important.
we acquired
At
Venmo,
the same time,
and
you know,
even now
like
today,
in our
you can't
business
send money
specifically,
between
we
Venmo and
really use
PayPal.
stress testing.
That's still a
because
closed
there are
system,
some
and what we're building is something that's like one step
actually,
above, which is that open access for everybody.
Like,
I think as a marketer, you have to
it does
think
not really
about
operate exactly
what's
as
the
traditional
balance
finance. Like
between
the tweet he
growth
was talking
marketing
about,
and brand
I'll just give an
marketing,
example,
and
is like
how do those pieces
perpetual
come
futures
together, and when do you
initial
start
margin.
to pull
I mean,
levers
initial
on growth,
margin
or
in
when do you
traditional
start
finance, you
to
don't
really
lose them when you
tell the
stop.
story about what your brand has stood for,
Actually, in
and
crypto market,
that's the
you lose
balance,
the
and you
variation
have to find the right
and the
place
one. So
to
if
do
you're
that.
involved in
But yeah,
business
I'm
trading,
super
this kind
excited.
of
I
activity,
feel like I used to do it
it's
at
very, very
Amazon, where I spent
important to
5 years telling everyone they were going to buy everything online,
having all the
and
possibilities in
people would
front
just
of you.
sort of
Everything is
laugh
a
at
bit
me.
challenging.
And
But
I kind
it
of
can
feel
be
like
done.
that about
If you
what
done
we're
it
doing right
properly,
now.
It's very exciting.
It's quite rewarding, I would say.
Right before you
Got
said
Tom, how do you have
Farouk
to say
here.
to that?
Farouk is, I would say,
We
one
see
of
risk
the
management as
most consistent.
not very
He
dissimilar
hates the
from
term, but I'll say
traditional
it.
finance in the sense
Influencers
that
in
if
the
you think
crypto
of
space, but also
the various forms of
walks
risk,
the
right?
walk.
There's market risk, there's
Asia
credit
has a
risk,
ton
there's
of people
counterparty
who are
risk,
really
there's
trying to
technology risk.
translate why crypto to
All
a
these
very
risks
vast
exist
market
in crypto
a lot
as
of
well.
different languages.
It's just the extent is
As a brand
quite different
builder,
versus traditional
especially in
finance.
crypto,
So
how do you
traditional
assess
finance, you don't think
the
about
influence
counterparty risk
that
as much, right?
these
So you're trading
KOLs
with
and influencers
the likes
have
of Goldman
on
Sachs
this
and Morgan Stanley.
ecosystem?
Here, you're
Is
literally
it a net
pre-funding
negative? Is it a
exchanges.
net positive?
When you think about
How do you work with them?
exchanges,
I think it's
the risk that
fascinating.
associated with
I think
putting
it's probably a
assets on
net
exchanges. So
positive.
that's kind
I
of
think
one risk.
that
The
you
second
have
risk,
to
which is
be
different,
really
is
careful about
really
the
the technology
people
risk,
that
right?
you
Smart
put your
contract
brand
risk. So if you're
with
providing liquidity
and
to
how
liquidity pools,
you
you have to think
talk
about
about it. There has
those
to be
risks.
a
So that's
level of
different.
trust that
Having
is
said that,
delivered. And
there are a
also
lot of
has to
principles that
be
we
a
still
real
use from
belief
traditional
from that
finance,
influencer. I
especially
don't
as
think
it
you can
relates
slap
to
a badge
market risk.
on
So
any
one of
influencer
the
and
things
just
we
say,
focus a
talk
lot
about
on
us. That's just
structuring
not
trades
effective and not
with a
good
risk-reward
marketing.
framework
What
that's
I do think
attractive,
is interesting,
and the
though,
concepts are
and
very
we didn't
similar, right?
expect
So you
this,
would look
is
for
that Uma,
option
as an
structures,
example,
and to be honest,
influencers in
option
the
markets
US,
is
who
pretty
perhaps might
deep
be
now
based in
across
Brazil,
Bitcoin and
they're
especially,
using
right?
Uma
So
to
you use
actually
some
run
of
their
those concepts
businesses.
there.
And
In addition to
that's
that,
something
you
we
also
didn't
look at risk
expect,
reward,
so
even
you
when
can
you
imagine that
invest
possibly in the
in
future we
early
may
stage
well be
projects
tapping into
or
that to start to
so-called
tell
venture
that piece
projects,
of the
but they
story.
tend to be liquid.
When
So in a
I
way,
had the
those
pleasure
are
of
almost like
interviewing,
options
Idris
where
Elba,
you effectively
who's helping
invest at a
in Ghana
lower valuation and
get the
expect
creator system
multiples return, but
on
you can potentially lose
blockchain
half of
because
that. So
he
some
says
of
these
those
people can't,
market
they're
risk
not being given
principles are
bank
still
accounts. They're not
applicable
seen as valuable
even in
enough to give a
crypto.
bank account. So
Do
now
you feel
you're
like
seeing
that
there's
we're
productions
creating,
that
I mean,
are
obviously, I
coming
know
up
we're all talking
where
about how this
the
solves
DP
everything,
and the
and it
cameraman
certainly
and the sound
hits
guy
on
are
a
being
lot of
paid all
traditional
through
pain points
payments
that
on
we had
blockchain,
on
and
Wall
that's- to
Street
me,
for
that's
many,
the-
many
it's
years.
the use case
But
that
it
you
does
guys
feel like
really
at times we're creating a new
are
ecosystem
bringing
that's
out
going
to
to come
the
with a
world,
whole
which is
new
pretty
vulnerability,
We
and
were
it's
in
not
Nigeria
covered
around
enough,
just before the
particularly I'm thinking
holidays,
for the end user
and
here and
we
the
had an
retail
event,
investor.
and we were expecting
To
maybe
be
50
fair and
people
honest,
to
you're like,
come,
where
and we were
is the
about
new risk that if
120
you were
people who
advising
turned up,
someone
and
new
they
to look
all
at the
wanted
space
to
who's
use
investing in
Uma.
it, what
And
is
we
the
have
new risk
influencers
that we
now
are
who
creating?
are
And it
down
might
in
be
Nigeria who are
solved
sending money
in
between
the near
themselves.
future, but what
Also,
is it
one
right now?
anecdotal story I heard was
Look, the
that
biggest
people who
shift,
travel
if you
with
will, is the fact that
bags of cash
crypto
are
and
now
digital
beginning to
assets is
switch
all
to Uma
about
because
no
it's safer for
intermediary,
them.
right?
And,
That's kind of
we
the
think
end
that
goal,
that
or
is
let's say
something,
the
again,
ideal
which will be
ideal
great
answer.
if we can make it
Here
happen,
in
make it
traditional
be real.
finance, you are always dependent
we didn't
on
talk about
an
this, but I was
intermediary, whether
interested
it's a
in the
prime
security
broker
protocol
or a bank.
for Uma. How
So you
does
can
one,
pinpoint
my name
any
is
kind of
public,
issue
so people can
and
send
pass on the
something
risk
to me,
to
but
that counterparty.
how do I make
Here,
sure that my money stays my
you know,
money?
it's all algorithm,
we have this
it's all
the
technology. technology. So some of those risks you have to manage yourself, and you can't really outsource some of that risk. So the capabilities that you need to build in-house is different from that perspective. So the role of technology in risk management, I would say, is far higher in crypto versus traditional finance.
Got it. Okay, running out of time, I want to ask you two more questions. First
from a point of view of a retail,
you run on Lightning, but you're also creating your own layer 2 blockchain
for granted, actually, but on the other side, there is
tell us
somebody that is
what
a good
the
actor.
idea behind Spark is. Why do you feel like you needed your own
is,
layer 2?
sometimes it's not.
So Spark is open source.
The
it's
kind of knowledge you need to have properly, the checks that you need to make. I'm just thinking about DeFi specifically, like smart contract risk, if it's been audited, not audited. These are concepts that normal people don't really know what where you're talking about. So they actually log in, they think it's safe, and they trade without really thinking too much. Thinking that on the other side, you have, I don't know, the same as the normal traditional finance, but it's not. It's not because everybody can actually create a protocol, put it on a blockchain, they just create a smart contract, and and maybe you have a backdoor who takes all the money out. So
because it addresses some of the problems that Lightning had, and we all know that stablecoins are
eventually it's going to get better because good actors obviously were going to be pushed out, and the good one was going to stay. They're going to get bigger. They're going to attract liquidity. People like Mike will help them
specifically around payments protocols,
and eventually, like people will just trade on this.
I guess how much is it?
Leave the other one apart.
How much is stablecoin?
I think everyone thinks, oh, crypto is going to come in and it's trustless and permissionless and it's fixing everything for me, and I don't need to learn anything. I can just start doing it. At the end of the day, you're still an investor. It's up to you to do your own research. There's always risk when you're making an investment into any asset class, let alone a brand new one. I want to read you guys a quote that I read last week. It's a CIO of a very large U.S. pension fund. I was surprised by this. He said blatantly in an interview, quote, he did not see cryptocurrency as an institutionally investable asset class because its low adoption among his peers and allocators. I would argue that's the wrong way to think about that, but I do think he is touching on something. Despite the enthusiasm of particularly detailed that we're seeing right now in the election, institutional investors are not here. They are we're on the same page with that term. Pension funds, endowments, foundations, sovereign wealth funds, they're not here yet. What is it going to take? When is this moment going to happen? What needs to evolve?
Making it orange is probably a very good early direction. I also think that if you can balance the levers that we all have on the channel, you also see better results. Not enough absolute growth marketing, actually explain how to narratives to enable people to understand that brand standing for and understand how they can also and how they can build it. This community, the crypto community is one of the best communities to build it. And with that comes innovation. I think we see some of that being made by marketing right now. For us, it's still, we're like a tiny percentage of our journey so far. So we're really beginning, but we want to do it. We want to do that. I hold true to myself.
That number even just remotely, you will understand that they're building a full.
You mentioned we would be the first, but it's still staying in mind. Inside conversation, you said, what are you solving for humans? Because a lot of people seem to invent problems to then create solutions. But it sounds like your core is there is a need that people have, and get to that layer. Really make it easier. Is that correct?
I think so. I think that as a brand, if you stay true to that inner truth, and then you don't just sort of throw words out there of language or visuals that don't mean anything in that's great what you're doing, you're going to win. And that's some of the crazy things that we all want to do as investors, is to make sure that your company really does become a lot more brand. And that's not what we're like. We want to make money move differently, and we really want to win.
For any conversation with institutional investors, so it is peculiar that
it's not thank you, audience. Yeah, another great session coming up right after this.
Thank you. It's a treat to see you.
I would say that I think, the gentleman was talking about investable assets. I mean, they think at the moment, and most institutions think like crypto is a gigantic casino where there is just trading and it's really no value. Well, you can actually choose Bitcoin as digital gold. I know it's not there. But the reality is exactly what he said. I mean, it's like behind there is like a gigantic revolution taking place, and there is value to be extracted investing in some specific project or whatever that will actually have an abnormal return compared to the traditional assets were normally very, very expensive. But the issue is like also there is a gigantic issue is that it's like the people that are managing these big institutions. I'm sorry to say they're old and they don't really want to start learning with their heads down. It's very difficult actually to start try to understand because they're sitting there. They don't think in a rush. The guy was talking about his peers. His peers are not doing anything. Eventually, a new guy will come and start investing. He will, they will lag behind, so he will be forced actually to get into it. But to me is inevitable, but eventually they will enter, and we will actually leave apart this idea that you're going to a casino where people trading and out and whatever, and there is value to be extracted.
Got time, I'd love to hear your perspective on this too.
I wouldn't blame the person who made that comment. To some extent, the signal to noise ratio in this asset class is not great, especially when it comes to how this industry is covered from outside in. And there are, it's a new technology, right? And there are fringe use cases. People used to say the same thing for internet back in the 1990s and 2000s, right? So you had Amazon, which made 96% at one point. So I don't blame someone looking at it from outside. Having said that, the way we think about it and the advice we give to our investors is that, look, this is an asset class where you should definitely dabble in. The reality is, over the last 17, 18 years, it's gone to $3+ trillion in market cap. So it's not nothing but so there's something going on there. But in order for you to really appreciate what's going on, you need to invest in this space a much smaller amount that they're willing to use. But that gives you the opportunity to learn about this asset class much closer and much deeper, and then you will start to see the potential of it. There are applications that are getting built on this, which are generating revenue in hundreds of millions of dollars with much lower FTE count. The number of people involved to build an application is much lower than the traditional web stack. So there's value to it, but it takes time for application that we are all familiar with to actually come on these rails and then use it. We're starting to see that payments, stablecoins, real-world asset tokenization. But I would say I don't think India covers it in the right way from that perspective. That should change.
And this is a little controversial question. Do you think are we far enough where FTX is in the rearview mirror for these institutional investors that they've been able to reset what's been built since and the safety nets that have been put in since and the kind of cleansing that we had? Do you think are we past that yet, or are we still paying the price for it?
We have come a long way. If we haven't completely passed that phase, as recent as last week, there have been some incidences already more in the DeFi side of things on the meme coin front. But I would say that the industry has come a long way. You have traditional players that have come into the space. Now, especially for us, most of our trading happens off exchange settlement, where you actually keep your assets on custodians while you can regulate on exchanges. So the technology has come far ahead in the last 18 months since then. There's more work to be done.
Yes, there's always more work to be done. Okay, we are definitely light on time, so we're going to fly through these last couple of questions before we get to our speed round. We have to cover centralized exchanges. Mike, give the audience your take. Where's the value of these? Where's the risk? How should people think of centralized exchanges in about 30 seconds?
Yeah, I was just about to add, so FTX for me is a call for action, not just for now, but also for the future, where we believe in driving innovation into use cases and transforming the entire infrastructure, if you will. And the way even institutional and retail investors will invest, then I feel we need to make sure that that innovation becomes super transparent, so that investors have a clue what we are trying to improve, and transparency about the benefits. And benefits are talked about settlement, but availability of data and moving liquidity without fragmentation around it. And as a market maker, I should be quite vocal about price discovery. So getting the best price and giving you a possibility to transact whenever you want to. I think that is key. And the last point on data I make is we feel data is perfect, but the reality from TradFi is the data world is not perfect. Even the data that is available is not perfect in order to feed risk-return models. If you believe in digitization, then there is a purifying effect on data quality, and that should massively impact the quality of investing. And it will trickle down from the institutional side into the retail world. So that's very much a belief I would like to carry forward.
Okay, I cannot. Oh, sorry. Go ahead.
Sorry. So are you pro-centralized exchange or not?
Well, I'm basically decentralized in a way that you need to basically fight fragmentation to make sure that you create interconnectivity and in a way also connectivity across all the different markets. And that is possible now with looking into technological advancement and making sure that you're connecting all the different markets. So,
Okay.
Okay, we're going to rapid fire speed round here. These truly have to be 1 or 2 word answers to keep the integrity of this speed round. So, what's the next Solana, Mike?
So I would like to
Two
make...
words, 2 words.
So I'm quite excited about our stablecoin project, Volatility. I don't want to do any marketing, but I very much believe that Europe has a fair chance to embrace the stablecoin in order to accelerate digital adoption.
Wow. Good job. Say it again.
It's Solana.
Solana. Okay. I like that. All right. Bitcoin. Is it going to decouple from the rest of crypto? Yes or no?
I don't think so.
Yes.
It already has.
There we go. 3 perspectives. That's the point of this panel. Finish this sentence in 1 or 2 words. Meme coins are
A threat to long-term innovation and adoption.
Should be banned.
Good to battle test our crypto rails.
perfect. Ready? Public or private blockchain?
Public.
There we go. Now unanimous. Okay, this is my favorite one. I like the best for last. When we used to all, I think we're all up here, remember using CDs to play music, and we thought, this is it. Music will never get better on a CD. We used to use a rotary phone to make a phone call, and we thought, this is all we need. We're sitting here today, 2025. Take yourselves 5 years into your future, your careers. What are we going to look back on this year thinking, oh, that's what crypto used to do then. Those are the old ways of doing it. So what's going to be that's new now, old in 5 years?
I very much bring it down to the end-user experience of investing. I think we fully underestimate the impact on our lives like this.
Yeah, I like the idea of the new way of investing, but at the same time, I will probably be on an island with nothing, so I will not probably be here.
And guys down.
Paying gas fees for everything we do.
There we go. Okay, past, present, future, Wall Street, crypto. Here we go. Thank you, everyone.